now eventually run on blockchains. I will say it's a 75-year overnight success story. But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you can go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they didn't like what you and I are doing right now. Voice over internet protocol is free.
Recent reports say that the U.S. Securities and Exchange Commission is using the final phase of Ethereum's move to proof-of-stake consensus to reclassify the leading altcoin as a security. The SEC is said to have sent subpoenas to 3 well-known crypto companies asking for records about the Ethereum Foundation. According to a recent Fortune report, the SEC's investigation into the foundation could give them the power to regulate Ethereum, as a CA Foundation post on GitHub also said that it might be being looked into by a state authority. This comes at a time when people are less sure that the agency will approve spot Ethereum applications by the May 23rd deadline, like it did for spot Bitcoin ETFs on January 10th, according to Eric Balchunas and James Sart, Bloomberg. ETF analysts. The chances of spot Ethereum ETF approvals are now down to 25%. Eric pointed out that the SEC isn't as involved with the ETFs as it was with the Bitcoin ETFs last year. The deadline is in 2 months, but the agency isn't meeting with applicants or asking questions like it did with the Bitcoin ETFs, even though the odds are against the ETF applications. The chairman and CEO of Morgan Creek Capital, as with the Bloomberg ETF analysts, Mark Yusko, thinks there is still a good chance we will get the approvals. However, like them, Yusko is not very optimistic about the May deadline. He thinks the approvals will be announced after the November elections. Now we will show you clips from Yusko's recent interview.
Definitely fear, uncertainty, and doubt. That is how the incumbents deal with technological innovation, right? So blockchains are the future of computing, full stop. And they're not, the technology is not going away. And I've been shilling this book, that Chris Dixon wrote, Read, Write, Own, for anybody who wants to understand why, this thing that I've been talking about for almost 10 years, about the cycle of technology, from the mainframe to the microchip, to the personal computer, to the internet, to the mobile net, and now the truth net, which is the internet of blockchains. And why, AI is not it, right? AI is a tool that's been around 75 years. It ran on, big computers, and it ran on personal computers, then it ran on the internet, and then it ran on the mobile net, and now eventually it'll run on blockchains. I will say it's a 75-year overnight success story. But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you can go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they didn't like what you and I are doing right now. Voice over internet protocol is free. They charge $3 a minute for long distance. We're far away from each other. And they liked charging $3 a minute for that. So they tried to get a bill passed, and they spread all these rumors about how the internet was bad. And thankfully, I would say, Al Gore did not invent the internet, but he did kill that bill, which stopped them from over-regulating it. And, the same thing's true now. The banks are being disrupted by these chains. And financial services, as we know it, which has had a good 838-year run under its current form, based on trust, is being displaced by truth. Blockchains give you truth. And therefore, as we think about, how would you stop these chains, these innovations from happening? Well, we'll over-regulate them. Well, but you don't have any jurisdiction because they're not securities. Well, then we'll classify them as securities. Or we'll try to classify them as commodities and get some other regulator to, collaborate, to work with us. Well, they tried that with Bitcoin. They tried to over-regulate. They tried to regulate by attack on, new technology and new innovation. And what happened? The courts said, Gary, you've overstepped your bounds. And now we have Bitcoin ETFs, and they're part of the culture of the future of financial services.
For sure.
So now next up is Ethereum. Well, Bitcoin is better money, right? It's a blockchain application for digital gold, or as Michael Saylor says, digital property.
As planned, Ethereum investors are mad at Eric and James because they aren't optimistic about the ETF approvals. This is because one Ethereum investor questioned their trustworthiness after reading their most recent comments about the ETFs. It was, Eric, our predictions are based on our reputation, not on whether we like Bitcoin or Ethereum. We honestly believe that the SEC should accept it, we just want to get it right, which is something we've done before, and things aren't looking good right now. I'm sorry, Eric said in another post that the odds would instantly get better if the SEC changed its mind. The post says that if the SEC made comments, our odds would at least double and could even triple from 25% to 50% or more, depending on who or what they said. However, it's hard to imagine them giving themselves and issuers less than 2 months to fix their comments. It's also easier to see why they might not be commenting and instead planning to deny it, which is stronger here than it was with the Bitcoin ETFs. In the post, he also said that the agency is not being sued to approve the ETFs, and that Gensler has changed his mind about Ethereum being a commodity after talking to Barron. Yusko points out an important factor that could quickly tip the balance in favor of the biggest altcoin. BlackRock, the biggest asset manager in the world, is one of the applicants. BlackRock also just launched its first tokenized fund on the Ethereum blockchain and has put $100 million into the project, according to Yusko. All of these things show that spot Ethereum ETFs are going to happen.
That is the future of money. Okay, great. Ethereum's different. Ethereum is the future of global compute. And you've heard, Sam Altman and others say that compute is the most valuable asset in the future. And that's true. And eventually it will be invisible, right? Like, I can't explain to you, Paul, how I can talk into this metal and glass box on my desk, and you can hear me and see me in real time in HD. I would say a guy with a face for radio would like if it wasn't so HD. But I can't explain how that works, but I don't need to, because it does. It's invisible. And I can't explain to you exactly how a hash is created for cryptography to work, but I don't need to. I just need it to work. And I need to know that once we have truth on chain, and that's different than online, right, and different than offline, right? Yeah. When you and I used to trade things, we would have to be physically proximate to each other, and we would exchange goods or services. Okay. Then online came along, and you could send me an email instead of a handwritten snail mail letter, and we could exchange goods or services electronically. We didn't have to be physically proximate to each other anymore. And online disrupted the old offline world. Well, now on-chain is going to disrupt how we exchange value as opposed to goods and services, because anything of value can now be digitized, can now be created as a unique asset on a blockchain. That's the mind-blowing part, right? I can take any asset in the world, create a unique asset that cannot be duplicated, cannot be double spent, cannot be challenged for who has title. It is digital property rights. And Ethereum is a global distributed network that allows certain types of transactions, as does Solana and others. We'll talk more about the differences there. So that's a long-winded way of saying it's FUD, it's expected, and the reality is the courts forced the SEC and Chairman Gensler to approve the Bitcoin ETF.
Yeah.
There has been no such court ruling, no such lawsuit to force his hand on Ethereum.
Right.
Therefore, he can do all of this, FUD campaign to make people afraid that it's not going to happen. And as we all know, people will buy the rumor, whatever that rumor is, whether it's new technology adoption, whether it's new chips, whether it's new products, and then some of them will sell the news. And so you'll get this run up in price. And then if it doesn't happen, or it does happen, they'll sell out of fear. If it doesn't happen, they'll sell out of, I'm going to take my profits if it does. And we saw that after the Bitcoin ETFs, and then they went back up. And now there's been some, downside pressure. Ethereum ran along with it, got all the way up over $5,000 and, or $4,000, sorry. And now, bam, back down again.
BlackRock's first tokenized asset fund and the asset management giant's first foray into real-world asset tokenization was announced on Wednesday. According to BlackRock's press release, the BUIDL token is fully backed by cash, U.S. Treasury bills, and repurchase agreements, and token holders will get a yield every day through blockchain rails. BlackRock said it will work with Security Eye, which will act as a transfer agent and tokenization platform, and BNI Mellon, which will hold the assets of the fund. Other companies that will be involved are Wallet Coinbase blocks for Fire's digital bank, and BitGo and Anchorage tokenizing real assets like bonds and funds is a fast-growing industry that is bringing together traditional financial players like BlackRock and the digital assets industry. The industry is growing so quickly that it's expected to reach over $16 trillion by 2030. What do you think, Mark? The talk with Yo and Eric's tweets, do you agree that spot Ethereum ETFs aren't likely to happen, especially since the deadline is coming up in just 2 months? Please share your thoughts and comments below, and don't forget to like, subscribe, and turn on post notifications for more videos like this. Thanks for watching.